Good evening, everyone, and welcome to the Daily Scan brought to you by Breakpoint Trading.net. Today is Wednesday, December the 11th, and we had CPI this morning. We'll talk about that a little bit and the market, see how the market did. First, a disclaimer. As always, I am not a financial advisor. I do not make recommendations, so anything that I say is for educational purposes only and not meant to be recommendations to buy or sell. I recommend that you work with an investment advisor. If that's something you would like to do, go to this website right here. Make sure that they are reputable. So let's jump into what happened today. Go to the home page, and you can see the market bias ticked up slightly today. So it's basically just kind of going sideways right now. Not too much is happening one way or the other. We'll take a look at each of the indexes first. So as you can see, the S&P went a little bit higher, going back up to all-time highs again. Not quite there, but almost there. The NASDAQ actually did even better. NASDAQ did hit all-time highs today and had a very nice candle. So actually ended at the top of its range for the day. So that's pretty good. That may continue higher. We may be getting close to getting into the rally for the end of the year. The Dow, on the other hand, went down slightly right on the 21-day moving average. So it is not moving up, went down a little bit today, but we'll see if that continues. And then Bitcoin, of course, hanging in there right at the 101.4 area, right at this Fibonacci level, 1025. So that's where we're sitting right now. This was measured from back here in 23, October of 23, which was the low for the indexes right there. So that's where Bitcoin was measured from. So we're just kind of going sideways right now, slightly up, and we'll see if it's going to break out here again soon. Still looks pretty good though. And then the dollar, US dollar, went higher a little bit today as well. All of the indicators momentum indicators starting to move up. Gold moved up today, bonds went down, and the 10-year yield just kind of going sideways, sitting right at 4.27 right now. Had a green candle today, so it went up slightly, but just sort of going sideways right in this 4.2 area. So all in all, the market is kind of treading water, going up a little bit, kind of preparing for the end of the year rally. We need to get through next week. We did make it through CPI today, and take a look at that here. One thing I would like to do each day is explore a different area of the website, just to give everyone a sense for what's out here. And the first thing I'll look at is CPI. So we'll go to the charts page, and on the left-hand side, under economic charts, we see CPI headline right there. And there it is. So it went up to 2.7, just as expected. So up a little bit more, but as expected. You can see there's a fairly wide gap in these two right here. So when a small one drops off and a wide one is added, from a mathematical perspective, that means it ticks slightly higher. And that's exactly what it did. I'll move this over to here. This is where we are now. And now we can see that the January report will be this one right here. I'll just change this. So in January, we've got this one here, which is a little bit bigger than the one this month. So depending on what happens on the front end over here, if we get one that's equal or slightly lower, it's going to look like it's coming down. And then we get these big ones right after that. So I think CPI probably will start to look like it's heading lower here soon, but maybe not right away. So that's what it looks like. That can be found right on the website. And also another area, a couple of things to look at here, something if you do nothing else, just a couple of areas just to check out. Once in a while, sustainability rotation. This is something I looked at in 21 in December. We're in December of 24 now. So in 21, all of these sustainability ratios were heading lower. Even though the market was heading higher, just like it is right now, market's going higher. But in December, in the same time back in 21, market was going higher just like this, but all of these things were going down. So consumer discretionary was underperforming staples, NASDAQ underperforming the S&P, growth, especially growth versus value, was underperforming. But this time it's not that way. This time it is the opposite. In fact, I've been saying for a while, we have to see what happens with this in December, because December was the warning sign in 21. I'm not seeing that this time. As a matter of fact, these ratios are actually climbing quite a bit higher. So consumer discretionary versus staples, you can see, is hitting highs right now. Growth versus value is not back to the high from here, but it's definitely going up, especially in December. It's accelerating significantly right now. The other ones too are trending higher. If we take it from basically right here in September, where we hit this high and we just started trending higher since September, all of these are going higher as well from that point. So that is good news. That means the market still has some life left in it, could continue to keep on moving. I think it will probably we'll make a rally into the end of the year. We'll start to watch the Santa rally when we get closer to Christmas. But this is something on the website that you might want to look at. Another area to check out every once in a while are these relative performance right here. So this is the 23 relative index performance. So this is what the indexes did in 23. You can see Bitcoin had a great year. Even then, it hadn't even broke 500 yet. 500,000, that is. So Bitcoin was outperforming. This is basically a performance graph. So the numbers actually aren't accurate over here. It's probably higher than 500. So I don't know what the numbers are. But from a performance perspective, Bitcoin outperformed NASDAQ. And you can see how they're stacked here. Magnificent Seven and the SPY, then the Russell 2000 and the Dow kind of ending pretty much equal. But this is what they did for the whole year in 23. And if you see where we are right now for the indexes in 24, Bitcoin again outperforming everything. This was the halving date for Bitcoin back here. Magnificent Seven is doing well. In fact, look how it's picked up just in December. So that rotation is now moving back into the big cap tech names right into the end of the year. One of them is on our daily scan, which we'll look at here in a minute. The NASDAQ, S&P, and then Russell, and then the Dow bringing up the rear now at this point. So NASDAQ starting to pick up as well. Russell 2000 has the one that's been lagging for the whole year. So we'll see if that can start to outperform here soon too. And then same kind of thing for bonds. Bonds, you can see high yield and junk bonds are up here at the top. These go back to the beginning of the year in this case. So they all start at the same date on January 2nd. Corporate bonds, junk bonds, this is the short junk bonds. And then 20-year bonds, TLT, actually had started a really nice run and then pulled back significantly today. So that looks like it's going to continue pulling back, perhaps. So that's another area you can just check out every once in a while. Then, of course, the recession watch components up here, which I'll talk about at some point later in the future. The other thing I like to look at is the McClellan oscillators. This basically is a moving average of the advanced decline lines. So if we look at the NASDAQ McClellan oscillator right here, it shows us a moving average of the advance and decliners. And you can see if it's above zero, that means there's more advancers than there are decliners. And right now, for the NASDAQ 100, there are more advancers, but it's declining. It's actually coming down ever since the beginning of December. So even as the NASDAQ, which is right here, has been going up and hitting new highs, it's doing so with fewer and fewer advancers. So that's not really what you want to see. You want to see more advancers when the market's going higher. And then the percent index down here, percent bullish index, is still sitting there right at 70. So that's usually the area where tops get put in somewhere near here, but it can stay up there for quite a while. You can see right here, it went over 70, and that was the top right here. Did it right there. There was a top right there, very small one. Did it significantly right there, and that was back in August. And we pulled back into the beginning of September. And then back over here, it never actually went above 70, but we had a big pullback here in July, from July until August. And you can see how the percent bullish went all the way down here to the green line at the bottom. And that, a lot of times this identifies bottoms better than tops. And that's what it did right here. It touched the 30% bullish down here, and that was the bottom. Right now, everything still looks very bullish, and I think it's going to continue that way. It may be choppy for the next week or so. Next week is, of course, the Fed meeting and options expiration next week. It's widely expected that the Fed's going to cut again, and I think if they do, then the market will like that. And then we have options expiration, and probably sometime Monday or Tuesday, I'll talk about Max Payne on this channel. So stay tuned for that next week. All right, so let's take a look now at, real quick, we can look at the sectors here. This gets updated every day, so you can see it's been updated already. So you can see the bearish sectors. Nothing really flipped today, nothing changed. So that's where it looks right now. And down at the bottom left is the same thing for the Magnificent Seven. Again, nothing flipped today either. AMD is the most bearish one in here. Oracle actually turned to bearish a few days ago when they reported earnings and missed. So Oracle's heading down, but everything else up here, this is really the Magnificent Seven up here. They are all bullish right now, except Nvidia. Nvidia is the one that actually is a little concerning. So let's take a look at that real quick. I'm going to close out some of these, and then I'm going to look at a couple of other stocks that people have asked about. So let's first take, just for curiosity, look at Nvidia. And Nvidia actually came back up today, hit just below the 21-day moving average, but it really hasn't done much. It's just moving sideways. So accumulation distribution is just going sideways. The money flow is starting to tick a little bit higher. The long-term money flow is higher. But Nvidia is just basically going sideways. They report, the next time they reported just a couple of weeks ago on the 20th. So we've got to wait till February for Nvidia to report again. So that's not a good sign. This is the leader of semiconductors, and semiconductors often is the leader of technology. So it's sitting right on its 50-day moving average and right above the cloud. So that's a very crucial point for Nvidia right now. It really needs to start to move away from that. Still outperforming its peers, which is this blue panel down here. And again, this is accumulation distribution, which is basically just doing nothing. That means it's really not being distributed or accumulated. Everyone that has it is keeping it. Nobody's really selling it with any conviction. So we'll see what happens. One thing to look at on the charts page is semiconductors. We'll look at those and see what they're doing. And you can see that hit triple top right up here 3 times. And based on what we talked about yesterday with the trend lines, we could draw a trend line right up across these bottoms right here. So you can see there's the trend line for semiconductors. So it really needs to stay above that. That is an ascending triangle, which is a bullish pattern. So we'll see if it gets up here and hits us again. Now this resistance area, it's hit it 3 times now. If it goes up and hits it again and comes down, every time it hits this, it'll make it stronger and stronger if it does eventually break out. So we'll continue to watch that and see what happens. The other one that was in the top 10 last week is software. Software have been doing really well, and it's still hanging in up there as well. So software is doing great still. Now, one other one I'm going to look at, because this is one of the stocks that someone asked me about, which is KB Homes. So before we look at KB Homes, let's go down here and look at home construction. This was in the bottom 10 of industry groups last week. So home construction right now is breaking below its 200-day moving average. that is not a good sign. So for KB Homes in particular, I have a feeling KB Homes is going to have a similar looking chart. Let's just put it in here and see. Look at that. Looks almost identical, doesn't it? So there's KB Homes. Also below its 200-day moving average. So if I were to draw a support line in here, I would probably put it right about there. As you can see, it's sitting right on that support right below the 200-day. So that is a critical area based on the size of this candle for today, and it closed near the bottom of its range. It likely is going to break through, I think, tomorrow, and may continue to go lower. If we look at a closer in view, again, you can see just been selling off. They had earnings in September, so their next earnings is in January. So right now, it's not looking too good for KB Homes, actually. Momentum is down. Accumulation distribution really rolled over back here, right in this area. It went up, try to make a breakout here above the 50-day, but then failed, and now sitting right on the 200-day. So it's not looking too good for that one. The other one that someone asked about was Summit, SMMT. And they said that they actually had this set up and came up in one of their alerts that they tried to duplicate my alerts. It did not come up in mine, so I'm not exactly sure what might be different, but this had been one of the top 10. So in general, it should be a fairly good stock. They reported on October 30th, and they're just going sideways. So this sideways pattern right here is a classic John Carter squeeze. So I'm going to look at the squeeze right here, and I suspect, yes, you can actually see how squeezed it is right there. So we have the bright green on either side. That is absolutely in a squeeze. And the dark green, which is basically the dark green, is the Bollinger Band. It's squeezed inside of the Keltner channel. So it is getting squeezed more and more and more. This is a coiled spring getting ready to explode. So when this one takes off, it likely is probably going to go higher because it went into this sideways pattern off of an uptrend. But that doesn't mean it will. You don't really know from this whether it's going to go up or down. One indication is the ADX down here. Now, the ADX, when it's sitting right at 20, which is right about where it is, that again just says that there's very little volatility, that it's just going sideways. But the green one now is starting to pull up close to the red one. So if the green one crosses and this one actually starts to pull away, especially if the 5 moving average crosses the 21, which is very close to doing right there. Of course, it's done it before in the squeeze. You can see the squeeze really started back here, continued there, hit it again there. It's really been in a squeeze for 2.5 months now. This is a very long squeeze. So this is one that really could explode, and it could explode to the upside once it goes. It made it up here to a high of about 34, looks like, over here. So right now it's sitting at 18. So that could be a significant move if it does break out to the upside. Now it's in the pharmaceutical industry group, which is healthcare, and that really is dependent on how healthcare does. We can look at pharmaceuticals here for the industry group and see what they look like. They don't look too good. In fact, they look terrible. So it's not in a great industry group. We can also look at the sector, healthcare sector, and the sector 2 has been going down. So you can see on this, I've actually drawn trend lines in, and I do that on a number of these. I usually go through all of the sectors every once in a while and just draw trend lines in wherever I see them. So that's what I did on healthcare. Right now, it's also heading lower. So that does not look good for Summit, but Summit is hanging in there. It's just going sideways. So if I go back to it again, and this time we'll look at relative strength. It's my number 7 button over here. This compares it to its peers, is the blue one. To me, that's the most important one. It is outperforming its peers because it's above zero, just going sideways, but it's hanging right in on its own moving average line. It's a 50-day moving average. So even though healthcare went down, it's still looking pretty good. Summit versus the S&P is hanging in there too. It's outperforming by a significant amount, by the way, more than 200%, outperforming its peers by 300%. But here's healthcare versus the S&P, underperforming. It's below zero. Here's its industry group, pharmaceuticals versus the sector, healthcare, underperforming, so below zero. And then its industry group of pharmaceuticals versus the S&P, also underperforming. So it's a really good, to take a real estate term, it's a really good house in a terrible neighborhood. So it's really hard to battle against a downward trend in the industry and the sector. But that doesn't mean it can't do that. And especially if it has some good news, it might be the catalyst. But right now, it's not looking too good. And actually, right up here at the top of this charts page, I put a quote from William O'Neill from Investors Business Daily. It says 27% of a stock's price movement is directly tied to the performance of the industry group it's in. Another 12% is due to the strength of its overall sector. Therefore, half of a stock's move is due to the strength of its respective group. That's from William O'Neill, founder of Investors Business Daily. So half of the move is based on sector and industry. And the fact that Summit has really just gone sideways, even though 50% of its move has gone down, that actually shows that it's strong. It's a very strong stock in a very weak group. But at some point, if the group continues to go down and some catalyst doesn't occur with Summit, it probably will get dragged down with the rest of the group. So that's my analysis of that one. That's actually a pretty interesting one. So let's take a look real quick at the daily scan and see where we are. First, I'll show the daily scan first, and then I'll show the actual scans. So Google right now has been a monster lately. So we got into Google on December 2nd. We've got 64 days to earnings. So the purchase price was 171.75. The stop right now is positive, and I am going to take the advice of John Carter and not make the stop so tight this time. See if we can't get even more gains out of this. The new one here is, let's look at Google first. By the way, one other point is notice that Google was in the list before. So Google made the list in November 6th, and it got stopped out for a 2% loss. All right, so if we look at Google back then, this is where it hit the scan right there. The initial stop was down here. Now this is one that I moved up kind of tighter, and it actually helped us that time. Even if I had left it down here, it still would have stopped out, but with a bigger loss. So it actually stopped out with a 2% loss in that case. But it's okay to watch stocks, and if they hit the scan again, like Google did right here, then just forget about what happened before, and we got in again here. So back here is where we got in the first time. This time we got in actually lower than the first time when it pulled back and came up to the 21 again. And now this time you can see what's happened. It's really just taken off. Now, I could move this up to the top of this gap right here, which is the top of this resistance right there. And at some point, I probably will do that. But it's right now the stop is sitting right on the 21. It's right at the top of this range right here. It's the bottom of this gap right here where it gapped up 2 days ago. So that's where I'm going to leave it. I'm not going to make the stop so tight this time. And look at the volume on Google. It's just continuing to go up. Now, one thing that John Carter likes to do is whenever he gets a signal, he likes to go 8 to 10 bars. So on a daily chart, that's 8 to 10 days. So 1, 2, 3, 4, 5, 6, 7. So tomorrow will be 8, and Friday will be 9. So we'll see what it does. And then I might make a decision maybe to sell half and let the rest ride. We'll see. So we'll see how that 8 to 10 rule works for us. Now, interestingly, I looked at this on his, you can actually look at it on squeeze right here. It had a squeeze way back here. You can actually see again where the squeeze is. And it came out of the squeeze right here, which is actually where we bought it the last time, right here, coming out of the squeeze. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. He would have sold it right up here. Probably would have been a good place to do it rather than just moving the stop up. But this time there's no squeeze. There's a little bit of a squeeze back here. But there really isn't a squeeze right here. So I'm using my rules in this case instead. But you can see that the momentum down here with the histogram, this kind of mirrors his histogram, not exactly, but it kind of does. This is basically just a MACD down here. And it's moving higher, which means the momentum is moving up. So it went above the 21-day right there with momentum going higher. Now his squeeze probably would have triggered right here when it went above zero, which would have been here. So for him, it would be 1, 2, 3. It's only 4 days in. For me, it's 7. It's 7 days in. So we'll see what happens. We'll continue to watch this, but this one's doing really well, which is nice. And the one that was just added today is DTM. This is a pipeline, DT midstream. You can see right here, just above the 21-day moving average. It pulled back, so it's been consistently making higher highs. That's what we like. Pulls back, goes back above the 21. If you remember from yesterday, one of John Carter's comments was, it's the simplest thing is just to wait for the 21-day moving average. So the histogram is starting to move higher, so momentum is starting to go up slightly. The MACD line is still falling. I'd like to see that curl back up and cross back over, but it's still above zero. So right now it's a little dicey. Doesn't mean it's going to continue up, but volume was great today, so that's good. If we look at it here, you see volume down here. So this all looks great. It's outperforming its peers, and the momentum, the advanced decline line is still looking good. So all of this looks good so far. We'll see if that continues. If we get back to the highs over here at about 108, 109, I'd like to at least get the stop up to break even, and then I'm gonna just let it run this time rather than putting them too tight. So that's the way it looks right now. By the way, if you want to see what happens when you put a stop too tight, SoundHound is a great example. So we got in right here. We had the stop below it. Price moved up, came back, actually moved up right here. The very next day, I moved the stop right up to the top of this resistance. So 2 days later, it got stopped out. And then it just exploded higher. So this is a great example. This is what this whole worksheet is all about, is learning, how to do better in the future. This one, if we just left the stop down here, or if I actually had just put it to the top of the candle where we got in, just to break even. If we just moved it to break even, it would not have stopped out, and it would be a huge gain all the way up here. So that's an example, and it's also a good way to use this worksheet to figure out what you might have done wrong, what you might have done right, etc. You can notice here that VRT, we had in twice. VRT had an 11% gain up here and a 5% loss down here on this one. This is probably another one where I set the stops too close. Here's VRT. Yeah, down back here, move the stop up here. If we just moved it up to break even, we'd still be in VRT, and it might just going sideways right now, but we'll see. We'll see what happens. So if you want to look at the another set of the DTM, by the way, was in this scan. So this is from my alerts. You can see right there, the only one that appeared, the 5 crossing the 21. It's the only one that showed up. But there was another set of alerts, which was a downtrend reversal with the elder bar right here. And there were quite a few on this one. So if anybody wants to try any of these, this is one that hit this particular alert hit today. See, December 11th. I can click down here to say view results. I'm going to save it to a chart list replace. I have a chart list that I call scan dump. It's the way I have my stock chart set up. It's where I can just dump things into it and just massage the data to see what's going on. So first, let's sort it by percent change. And of course, MicroStrategy is the number one right at the top, up 9% today. Software industry, but it's really Bitcoin. But you can see the other ones that did well: footwear, specialty finance, gold mining rather. So those are the ones that performed the best today. The worst performer was still positive. Zions Bancorp was still positive. I can sort by industry group. So if I want to find software companies, for instance, Cadence Design and MicroStrategy down here. So I can look at Cadence Design, see what the chart looks like. And so there's where there's the downtrend. So we want at least 4 days lower lows coming down. And then it's starting to move higher, just barely starting to move higher, but it is. So this might be just starting to take off. So that's the way you can massage the data and use the alerts. If I want to look at each one of these one by one, which we can go through very quickly, this is alphabetical, but it uses my default chart pattern. So right here, you can see this is a gold miner. It looks like it's starting to move up. So gold might be starting to do well. This is an asset manager. This one looks fantastic, by the way. This might be a really good one. This is an example. This is the list that I draw from are typically ones that have been in the top 10 lists. And this is what they typically look like: higher highs and higher lows, pulling back to the 21-day moving average. Back here, pulling back to the 21 and taking off, pulling back to the 21, taking off, pulled back again, just starting to take off. So this one might be a good one, actually, probably a good one to add. We'll see what it does tomorrow. So there's Cadence. We just showed that. Carlisle Specialty Finance, same thing, pulling back to the 21 and taking off. This is why John Carter said, just wait for the 21. It's a really good example. 21-day moving average is the reversion to the mean. So a strong stock that gets too far above it will pull back. And when it does, traders will step in and start buying. So right now it had pulled back and it's starting to move up again. So that one actually looks pretty interesting. This one does. This is real estate, Compass. You'll notice the charts look very similar. Higher highs, higher lows, pulling back to the 21 and then moving higher. This is a bank. There's oil equipment and services, which is where DTM is as well. No, DTM is in pipeline, but same sector. This is specialty finance, Moody's. Here's MicroStrategy, of course. MicroStrategy, actually, all of these indicators look really good for MicroStrategy. So this one might continue to move higher, which has a good implication for Bitcoin, by the way. It's basically a proxy for Bitcoin. Norwegian Cruise Line. The cruise lines have done really well. Again, pulling back to the 21 and then moving higher. That's where it is right now. So that one actually looks pretty good. There's a few on here that I could have actually added to our spreadsheet. Maybe I actually will tomorrow. We'll see. Pitney Bowes. Here's Synovus Financial. This one I actually thought looked interesting today as well. It's in the finance group. Next one is airlines. United Airlines has done great. Look at that chart, just steadily moving higher. It goes up and sideways, up and sideways. Really hasn't broken the 21-day this whole time. So airlines are looking really solid right now. Wolverine is a footwear, and big, huge candle right here, probably earnings. That's 11.7. Yeah, that's earnings right there. And it just went sideways and looks like now it's breaking out. So this probably, is this the last one? No, there's one more. Zion Bancorp. So again, higher highs, higher lows, come back to the 21, gaps up. This is probably earnings back here. November 21st. No, earnings were actually over here. So this actually started moving higher before earnings. And right now looks like it's getting ready to start to move again. If we go back over here to Wolverine, and you can see how this has just gone sideways right there. That is typically what a squeeze looks like on John Carter's squeeze. So there it is. If we look at John Carter's squeeze, there's the bright green right there. So it is in a squeeze right now. He likes to see it in there for 5 days. So 1, 2, 3, 4, 5. It's breaking out right now. Today, it's breaking out of the squeeze right now. So this one could run for another 8 to 10 bars, theoretically. So this actually, it looks pretty interesting. By the way, I covered this when I covered the squeeze last week. So you can go back and watch that. It's in the playlist section. But this is basically how John Carter initially created his squeeze. He describes this in his book. And if you understand technical analysis, when I read his book, I actually created a chart that looked like the squeeze that he uses, including the ADX line down here that he also likes to use. So this one actually looks really, really interesting. Wolverine Worldwide just broke out today. So I'm going to keep an eye on this one tomorrow. This one might be ready to run higher. All right, that's it for today. Thanks for watching. That's the daily scan. Only 2 on there so far. Let's real quick take a look at IWM and see if it's going to move. It hit right here, pulled back to the 21, went up a little bit, but pulled back again at the end of the day. So we'll have to see if this is going to start to run into the end of December. I'd like to see the momentum bar starting to get shorter up here, starting to move higher. And also accumulation distribution, I'd like to see that to start to curl up as well. So we're not out of the woods yet on this. If I were to draw a channel around this with some trend lines, I would probably make it look something like that, and then Control D, duplicate that. It's a very narrow channel right there. So you can see what it's in. If it breaks out of this channel, then it should head higher. In fact, that is a bull flag right there, or pennant, bull pennant. So if you think of the bottom here and the top here is the flagpole, we're basically looking at, save this, and the bottom down here is at 226 right there. And the midpoint is at about 240, let's call it. So that's 14 points. So we should get another 14 points higher, so 254. That is the measured move if it breaks out. So that's a big if, but if it breaks out of this channel, then 254 is the measured move for this, if it gets that high. So we'll continue to watch this. This looks really interesting. The second half of December is all the way until April is the strongest time for the Russell 2000. I covered that with the Stock Traders Almanac going back 75 years. That is the strongest period for the Russell 2000, starting in the second week of December. We're not in the second week yet, so we still got another week and a half to go before that period starts. So this could just bounce around here for a while, but we'll see. Continue to watch that. Very interesting. All right, thanks for watching, everyone. Please like and subscribe so I can keep this going. Give me your comments. Let me know things you would like to see. Had a great reaction for Technical Tuesday yesterday, and some people sent in requests of what they would like to see. I think next week I'm going to do the RSI indicator, but there's a bunch of them on the list now that people have asked for, so I'll continue to do that. So thanks so much for watching, and again, please like and subscribe, and I will talk to you again tomorrow. Take care.